So if you guys have seen my videos earlier today, you know that I think a end of the week bounce is coming. I do think a rally is coming, as we are going to have to see a lot of de-hedging after the Fed meeting. And that's what I want to hone in on here in this video, is exactly how far AMC can go. I'm not a fortune teller. I'm not going to be your cheerleader here. I don't care what happens in the short term, but if you do have a lot of margin, or you are worried about this, maybe you have a lot of money in AMC, way too much, and you probably should. This is something to pay attention to, nothing to freak out about, because a loss is not a loss until ultimately you sell it, right? But that's what we're going to cover here in this video, as well as go over all of the end of the day data that you need to know, the Stocko tracker data, my bull thesis, the Ortex data, as well as the technical analysis. So let's jump right into it, guys. Hit that like button for me if you like this video, or if you bought the dip today, give me a gauge on where your guys' sentiment is at. Consider subscribing to the channel, all of that good stuff. Now let's start off this video with how low AMC can go. And AMC is not the only stock that has been getting beaten down. Obviously AMC down 14% right now. We were down over 17% at the lowest point in the day at $22.46 per share. So it could be a whole lot worse. It looks like we're going to see a continued end of the day melt up throughout the rest of the day today. So by the time you guys see this video, wouldn't surprise me if AMC did close down just 10% or 9%, because we do have about 20 minutes left of trading. Anything can happen in those last 20 minutes, right? So when you think about how low AMC can actually go, we have to think about the fear catalyst that is going on right now. We do have Omicron, which is kind of still there, kind of not. That's not really what's causing these stocks to drop. It's the Fed meeting tomorrow and on Wednesday. Wednesday, Fed Jerome Powell is going to be speaking. All eyes are on the Fed. What we know from the Fed, or what we expect to come out and what's priced in by the marketplace, is a faster tapering, as fast as 2 to 3 times as fast as what we initially expected. So if that comes out along those same lines, I do expect to see a bullish sentiment from the marketplace. If we do see Fed Jerome Powell actually come out and raise interest rates, or do something crazy that is unexpected, then I would expect the markets to continue to slide to the downside, and for AMC to have some continued downside. But if you have not been in the markets for an extended amount of time, you have not seen these big fear catalysts come and go, then you would think the fear catalyst or peak fear would be after the event, but it's actually the opposite. So up until Wednesday, up until Fed Jerome Powell speaks, that is going to be peak fear. And when you're thinking about how low AMC can go, how long this fear will last, we only have 2 trading days left until we are over peak fear. So we can keep continuing to come down if we pull this out to the daily candlestick chart. I personally think $20 is probably going to be that low until we do get this mega bounce that I went over in the last video. But ultimately under that, a lot of people are calling in between $17 and $16 per share, which is definitely possible. I think it's not as probable though. So that's basically, long story short, why I think we will stay above 20, if not hover around $20 per share, because we don't have much time left until peak fear is going to be over with. Now let's get into some of the data that you guys need to know, and then let's talk about a little bit more, once we get to the option chain, this mega bounce theory that I do have. So as far as the Ortex data today, let's refresh this page. We're looking at 18.68% short interest of free float. We know these are only baseline estimates. The short interest is actually over 20%. That's a well-known given fact that we know this, right? No need to try to convince you guys of that. We've talked about it many times. 95.83 million shares that are sold short, with a share utilization of 77% and days to cover of 2.31. These numbers have not moved around a whole lot. Just know the short interest is as high as 25%, or at least that's what's going to come out from the exchange reported short interest, and that's going to put a lot of pressure on the short sellers of AMC to possibly cover on their short positions, on top of all of the de-hedging that we're going to talk about right now. And that really consists of the option chain. We've had a lot of options that have ran into the money. 142,000 puts that are now in the money. That controls 14.2 million shares that will potentially have to be fully hedged for by Friday. And most of this hedging is actually happening today, in my personal opinion, because a lot of these are going super far into the money. You can think about it, anything in between the $30 and the $25 strike is probably almost fully hedged for today, and that's part and part why we did see this big drop, as well as shorting. Everything else we know happens during these big drops, short ladder attacks and spoofing. But as far as this bounce, right, when puts run from out of the money into the money, market makers, they have to hedge stock to basically, or hedge stock, short stock to hedge for these puts. Once they run from into the money, out of the money, say we get a big bounce, you see that de-hedging. And at the same time, you're going to see calls go from out of the money into the money. And the fact there's only going to be 2 days left to expiration until Friday, and these numbers are so high. I mean, you're looking at 357,000 calls that are out of the money, 13,800 that are in the money. In the money puts at 142,000, out of the money puts at 108,000. There's a lot of potential de-hedging that is going to have to happen on the put side, and hedging for obviously the upside on the call side by this Friday. So hopefully that made some sense to you guys. This is not your average week of expiration where you'll see, like next week, 46,000 calls out of the money and not even 1,000 that are in the money. And that's the case for the next 4 expiration weeks after this. It's not a normal week of expiration. This is a date we've been looking forward to for a long time, due to the fact of intense volatility because of what I am telling you guys here in this video. So it really could go either way, but I think at this point, most of the puts that are going to go into the money, if we do continue to have a sell-off, are already in the money right now. I think there's a much more greater likelihood to see a lot of de-hedging rather than continued hedging to the downside. And just the calls, there's only 13,800 that are still in the money. Most of the activity, like 95% of the call activity, is out of the money. So I would put my money on an end of the week bounce after Fed Jerome Powell's meeting, after peak fear is gone. So hopefully that makes some sense to you guys. Let's talk a little bit more about the technical analysis, and we're sitting at a very interesting situation right now, or interesting level. So I already said the low for the day was $22.46, so I would watch about $22.50 to see if we can remain above that. I would put a little bit of support on that just because we bounced off of it today. I wouldn't hold my hat on it though. The next significant support level is $20 per share, but we are right in the middle, literally in the middle between $20, our support level, and our previous support level from Friday at $26.50 per share. So this could literally go either way, guys. We're like firmly right in the middle here, but after a 16% drop, I think it's logical to expect a bounce. I do think traders in general, if you weren't diamond handing your shares, I think it makes a lot of sense to buy some shares to make a quick trade, even based off of the bounce here after this sell-off. So I think this information makes a lot of sense. Hopefully it does resonate with you. We're still not seeing crazy high volume, only about 77.5 million shares that have traded hands, compared to just a couple of months ago. Even back in August, we seen 225,000 shares that traded or 225 million shares that traded hands, and consecutively over 100 million for volume on any given day. This is still, relatively speaking, throughout the course of this trade, still a very mild volume day. It's certainly not a low volume day. It's not a high volume day. It's somewhat in the middle, more skewed to the low side in my personal opinion. But once you see that bullish volume come back in, once you see that de-hedging, I do expect a bounce. Like I said though, just to reiterate, worst case scenario in my personal opinion, I'm not a fortune teller, I'm not your cheerleader here, I don't care what happens on the day-to-day basis of AMC, but 1750, that's going to be like your worst case scenario. That's my worst case scenario. That's what I think is not going to happen. My base case, what I think could happen, is $20 per share. A lot of psychological support at $20 per share, and I think a lot of people would just pick up shares just because at $20 per share, the fundamental valuation of AMC is not too far off at about $20 per share. Screw the financial media. $5, $7, $10 per share, that's bullshit. AMC is worth a lot more than that on a fundamental valuation, in my personal opinion. Now, as far as upside, like I said, with this bounce, I would watch the 200-day moving average because we did have a lot of resistance around here. I don't really think 2650, our previous support levels, are going to be too much resistance because we did stay in between this range for a while. and ultimately about $28 as well. Don't think they will be significant. Definitely the 200-day moving average has proven it will be a decent level of resistance, and that is at $31.91 per share. After that, $35 per share, and then our 50 and 100-day moving averages after that. Those are going to be the real levels to break, and then we're clear for $45, $50, $55 per share. I'm not saying it's going to happen tomorrow, not really saying that's going to happen by the end of the week or in the next couple of weeks. I'm saying it's going to happen in due time. Patience pays, and I have been buying the dip today, so feel free to do whatever you guys want to do. I'm not a financial advisor, I'm not a financial planner, I'm certainly not your dad or anything else in between, so do what you guys want to do, come to your own conclusions. Hopefully you guys found some value out of this video. If you did, hit that like button for me, consider subscribing to the channel, hit that like button for me in general if you did buy the dip today like I did myself. Check out the links down below in the description if you guys want to join public. They do not use payment for order flow whatsoever. That's where I've been buying my shares of AMC today and throughout this whole sell-off, sending my orders straight to the lit exchanges. Get a free share, give me a free share, help support the channel, and check out the pinned comment down below in the comment section. So love and appreciate you guys. Thank you for watching this video and supporting this channel. I hope you guys are doing well today. Keep those emotions in check. But until next time, you guys take care. I'll see you in the next video.